If there's one thing community banking has a lot of, it's terms and acronyms. We're going to break down the most common ones, tell you what they are, more importantly, tell you why you should care. Let's get started. Today, we're going to talk about cash value of life insurance, or you might see it written on somebody's financial statement as CVLI. So what we're going to cover is, what does this term mean? And then secondly, as a community banker, why should we even care? So first off, what does it mean? Well, to answer that, we got to take a little bit of a step back and think about life insurance in general. So by and large, there's kind of two overarching buckets of life insurance out there. There's what's referred to as term, and then there's kind of everything else, which could include whole, could include variable life, could include any terminology other than just term. And what the differences between them are is that a term policy gives you only the death benefit that you really think of when you think of life insurance, whereas all of the other flavors of life insurance will tag along some other benefits along with that death benefit. Now, in the case of cash value of life insurance, that is a savings vehicle. And so the difference between a term policy and a policy that includes this cash value life insurance is that when you're making a payment on that premium, some of that premium is going towards the death benefit, and then the rest of it is going towards building up value in that cash value bucket. So as a community banker, why should I even care? Well, this is going to be something that's going to be common to see on a borrower's, or specifically a guarantor's, or a personal financial statement, and you might see it listed out with the acronym CVLI. And why a community banker would really care about a cash value life insurance is because it can provide a source of collateral. Now, just like how you can take a CD or a savings account as collateral on a loan, cash value of life insurance is a very good source of collateral as well. It can also be a source of liquidity. So if your borrower has a string of tough times, that could be one avenue that the borrower could either borrow against or cash out of to go and get the liquidity that they may need. Now, the third reason why a banker should be aware of this is because it tends to be more expensive than a regular term policy. Okay, now why that matters? If you think of when we give out a loan, our overall goal is to go and get that loan back. Well, when they're going to get a life insurance policy that includes both the benefit, the death benefit, plus all this other stuff, well, that plus all other stuff does cost money. And so these policies are going to cost more, which means they're going to spend more on those premiums. And the more they spend on premiums, the less excess money they have to make sure that your loan payment stays paid. And that's what you need to know about cash value life insurance. Hey, if you're a community banker and you enjoyed this video, I got two more things for you. The first, consider subscribing to the channel. And the second, head on over to mybankerguide.com for your free copy of the DSCR cheat sheet. The DSCR is the banker's favorite ratio, so learn how to calculate it, learn what to watch out for, and then how to make sure that you get it right every single time so that your loans are more likely to get repaid.